The single biggest IPO in the history of the stock market is happening on Friday. $1.75 trillion. And the company behind it, SpaceX, is essentially a machine for setting money on fire. It loses billions of dollars every 90 days. So here's the question I can't stop thinking about, which is why are thousands of smart people lining up to buy a piece of a company that loses money by the boatload? And the answer is the same reason that smart people overpay for houses, they blow up their budgets, and they end up house poor. And by the end of this video, you're going to know how to never be one of those people. We're going to nerd out a little bit because I'm going to break down three things. What's actually in the filing, the stuff that the headlines are going to skip, why people are going to buy it anyway, and the one discipline that protects your money on the biggest purchase that you're ever going to make. Now, I'm a mortgage guy. I'm not a stockbroker, so I'm not here to tell you whether or not to buy SpaceX, but I am here to hand you the lens to make a decision from. So let's go. All right, so here's what's happening. SpaceX is going public on the NASDAQ on Friday, June the 12th. The ticker is SPCX. And they are targeting roughly $135 a share, looking to raise about $75 billion. Now, that's not just a big IPO. That's the biggest IPO in history, more than 3 times the previous record holder. At that price, the whole company is valued about $1.75 trillion. To put that into perspective, that's bigger than the entire economy of most countries on Earth. And look, the story is genuinely incredible, right? Rockets that land themselves, Starlink beaming internet to the middle of nowhere, talk of data centers in space by 2028, asteroid mining, point-to-point rocket travel. Like the filing itself says that the mission of the company is to, quote, keep the light of consciousness alive across multiple planets. That's a phrase that shows up in the document about 10 times. And it reads less like a financial filing and more like a sci-fi novel with a stock ticker. And that is exactly why we need to slow down. Because when you actually open up the filing and you skim past the rocket photos, the math gets a little uncomfortable. This is a company that has reportedly lost something like $37 billion since it started. Last quarter alone, billions more in the red. This is not a profitable business. It is a money furnace with a really, really cool flame. Now, here's the part I want to tattoo on your brain because this same exact trick gets played on prospective home buyers every single day. SpaceX flashes a number called adjusted EBITDA, and this number looks positive, healthy even. Like it's them saying, see, look, we make money. But if you're not a finance nerd, adjusted EBITDA essentially means it's our earnings if you ignore the expensive stuff. And what's the expensive stuff for SpaceX? The rockets, the satellites that fall out of the sky every 5 years and have to be replaced. In other words, the entire business. They're saying we're profitable if you ignore the cost of doing the thing we do. That's like me telling you that your mortgage is actually totally affordable as long as we ignore the payment. And that's not analysis. That is a magic trick. And once you see it, you cannot unsee it. Now, to be fair, before all the Elon people come in my mentions, and this does matter, it's not all furnace. If you split the company into its various pieces, the satellite internet business, Starlink, is a badass product, a badass company, and it's actually throwing off real profit. It works. But the rocket side is losing money, and the new AI side, and the part that includes Twitter, this is bleeding billions of dollars a quarter, and that loss is growing. So the bull case for this company isn't that this is profitable. The bull case for this company is that, trust us, one of these days, these moonshots are going to pay off enormously. And maybe it does, but you just have to notice what you're being asked to buy. You're not being asked to buy cash flow because it doesn't exist. You're being asked to buy a feeling about the future. So why are people going to still smash the buy button anyway? Because excitement switches off the part of your brain that asks boring questions. When something feels like the future, when we're talking about Elon, it's Mars, it's the light of consciousness, your brain is quietly going to stop asking the only question that actually protects you, which is, does the math work? And granted, nobody wants to be the person at the party going, well, actually, the depreciation schedule concerns me. You want to be on the fucking rocket. And I see this happen every single week, not just with rockets, but with houses. The most disciplined, spreadsheet-loving, do-their-homework clients I know, they will walk into an open house, they will fall in love with the kitchen island, with the natural light, and within 20 minutes, they have emotionally bought themselves a house they have no business buying. The dream itself switched off the math. And it's the same exact wiring. SpaceX is just the $1 trillion version of falling for the granite countertops. So here's the discipline I would ask you to consider, whether it be buying a house, buying SpaceX, or buying anything else. And it's the whole reason that underwriting exists. When your loan goes through the system, we call that the automated underwriting system. That system does not care if the house is beautiful. It doesn't care about the light or the island or how the neighborhood made you feel. It asks one cold, unsentimental question. Does the cash flow work? Can this client actually carry this debt? Not in fantasy, but through a job change, a rate move, a surprise expense, a kid. Those are the questions it asks. And that is precisely the question that Wall Street is refusing to ask SpaceX. And it's the question you have to ask yourself before you sign for a house. Because here's the truth about the value of anything, whether we're talking about a company, a stock, a house. In the long run, the value is the cash flow. You're not buying a vibe. You're buying the dollars and the cents in the thing that it produces or the payment that you can sustain in the case of a house. You strip away the romance and it's just math. So when you buy a home, be the underwriter that Wall Street won't be. Yes, the granite is wonderful. The neighborhood is great. But the asset isn't the kitchen. The asset is a payment you can actually carry for 30 years without your life having to go perfectly. Buy the cash flow, not the vibes. And obviously that this does not mean don't buy a home. Homeownership is still one of, if not the best wealth building tools that regular people have access to, but only when the math works. It means that you need to buy with your eyes wide open instead of your heart wide open. The dream and the math, they are allowed to be in the same room. You just don't let the dream do the math. Now, I have to owe you the other side because I'm not here to be right on the internet. I'm here to be useful. Could SpaceX actually go up after the IPO even though it loses money? Yes, it absolutely could. There's a mechanic where a couple weeks after a giant IPO, index funds are essentially forced to buy that stock whether they want to or not. And that can push the price up in the short term regardless of profit. So someone could buy in, watch it pop, and then tell me in the comments that I was wrong for sure. This could very well happen. But here's the thing. That wouldn't make me wrong. It would actually make my whole point. And that is that hype moves the price in the short term. Cash flow decides who's holding the bag in the long term. And those are two completely different games. The danger is confusing a short-term price pop for a sound long-term decision. People do that with stocks. And people that do that with houses, they can't actually afford because real estate always goes up. Sometimes the music plays for a while, but the question is always, when it stops, can you make the payment? So look, the folks buying SpaceX at $1.75 trillion tomorrow, they are buying a feeling. That's their call. And honestly, I kind of admire the optimism. But you're about to make a decision that is hundreds of times more important to your actual life than any stock, which is buying a home. Don't buy yours on a feeling. And if you want to run the real math, the boring, honest, does this actually work for my life math on a home anywhere in the country, this is the reason I do this. Drop a comment, send me a message. I will be the guy that asks the questions that Wall Street is too excited to ask. And if this reframed how you think about big money decisions, hit subscribe. This is the kind of stuff I break down here every week, and I'll see you on the next one.